So, good afternoon, everybody. Thanks for joining us this afternoon. And we are really greatly appreciative of Halle Bennett, who is an attorney with Levin Gann, and just got a little bit of an kind of an understanding appreciation. So Halle is based in, her office is in Towson, Maryland, yet she lives in Baltimore. So she is coming to us today from Baltimore, and thank you and welcome. And you are speaking to agents that operate down here in the Lower Eastern Shore in both Maryland and in Delaware. So that's kind of your audience today.
All right. So thank you all for having me. I'm really happy to be here. So my firm and I have been working with a lot of independent contractors and some small businesses to get some financial relief for people with all this CARES package stuff that's going on. So I'm really looking forward to trying to help you all out with this today. I know that it's very confusing and I feel like it changes every time I turn around. So I prepared a PowerPoint today that we're going to kind of walk through. And then when we're done, I hope to be able to answer any questions that people have. So without further ado, I'm going to try to share my screen. So I'm going to take a look. And all right, so someone nod and tell me we can see the PowerPoint. Great. So the first thing we're going to kind of talk about is if it's going to let me change. Yes, it does. The PPP program. So this is the one that I feel like a lot of people heard about because this is the one that you get forgiveness for. And it was just recently refunded. So everyone's really excited about everything going on with this one. The thing I want to make very clear is that you need to, if you're going to use the PPP, which you can decide after we go through everything and ask some questions, is you need to apply now. So the funding, we're on the second round. It's going to run out again. I was just looking at some of the data. People are saying maybe by like Friday or Monday next week, hopefully a little bit later than that. But if you do not already have an application in the queue, you need to get on it. So how to apply for this? So you're going to apply by going to your bank. Why is this not going to the next slide? I think it froze. Okay, now you get a lot more extra things. So the first thing you're going to do is you're going to apply to your bank. So certain banks are approved PPP lenders from the SBA. This has recently been increased to include what are called fintech companies. So that's going to be PayPal, Intuit, Share, Stripe. There's quite a few of them. So currently, after I just went through this, only PayPal is currently still accepting applications. And from a practical standpoint, as someone that's helped clients get this loan, I found it very difficult to get this loan through without having a real live banker to talk to on the phone. So I do still recommend using a bank. My advice would be first to try your bank. So particularly if you have a mortgage or a business loan, ask them to submit your application, particularly through the eTran platform. That helped a lot of people get through quicker. We saw that in the first round. And then after that, I would look into community banks. I know that Orrstown, People's Bank, Sandy Spring, my firm has people that work with some of those banks, and we've had some success getting people through. And then after that, I would look into the fintech companies. So particularly, like I said, PayPal. So if you're in Maryland and getting the runaround, because like you might have heard, my firm is based in Maryland, please contact me. We are familiar with some banks in the area. My firm has contacts. We can get you in a queue somewhere. So then what are you going to need to apply? So first off, you're going to need the application form, which the bank will provide for you. If you are an independent contractor, you're going to need your Schedule C of Form 1040. Particularly your line 31 from that is being used to calculate both your amount that you will get from the loan and also later your forgiveness. And then you're also going to need a 1099 or income and expenses. You're going to need an invoice or bank statement showing that you are self-employed, as well as an invoice or bank statement showing that you were in operation around February 15th of this year. So then who is eligible? Potentially, if it will move. No, okay. Well, we're gonna leave it. Don't know why it's so slow, sorry guys. The eligibility part of this. So businesses with less than 500 employees, sole proprietors, independent contractors are eligible, and businesses with a net worth of up to 15 million and an average income for the last 2 years that does not exceed 5 million. Those last two things they're not really applicable to most people. This was something that they put in after Ruth's Chris and Potbelly's and all those larger companies ran away with a ton of the funding from round one. So real estate agents are generally going to be considered independent contractors. You just have to certify that you are severely impacted by the COVID-19 disaster. Real estate is down 50%, so you're going to meet that requirement as well. The terms for the PPP are very much set in stone. It's not really like a standard loan where you give a bunch of information, they look at it and they decide what your interest rate and such is. It's going to be a 1% interest with a 2-year term and a 6-month deferment period. So if your bank is telling you something else, that is wrong. I would not know where they are beginning to get that information from. So please give me a call if you're hearing something that's different. These terms are really favorable. So to kind of understand that, I would say that most savings accounts are at about 1% interest. So an unforgiven amount you can of the PPP loan, you could just stick in a savings account and you'd end up breaking even. So calculating your loan amount is going to be, for independent contractors, they use your line 31 of Schedule C. And to calculate that, so you take that amount, there it is, and you divide by 12 and multiply by 2.5. For self-employed with employees, it's a little bit more of a complicated equation. So if you have someone that works for you, you're going to want to include these additional lines from these additional documents. I've tried to kind of piece them out so that it's easier for everyone to just look and be like, oh, this is the math. So that's a little bit more straightforward. If you're a business, such as a corporation, LLC, you're going to be your average monthly wages, and then over the last 12 months, so you're going to divide by 12, multiply by 2.5. Wages would include severance, group healthcare, retirement, state and local taxes. And you want to remember when you're doing this that everything is capped at 100,000. So if you used to make $150,000, that's what's on your Schedule C, line 31. You are now making 100,000. You are capped, you're cut off. So you do that math, you put that in your application. If we can go to the next page, it'd be lovely. There we go. Aha. Nope. Okay, sorry. So the loan is meant to cover your payroll costs, capped at 100,000 per employee, rent, mortgage payments, and utilities. So your payroll cost is going to be wages, commissions, income, net earnings from self-employment, capped at that 100,000 on an annualized basis per employee. And that's meant to cover the 8-week period from the origination of the loan. So the second you get your money, that's your covered period. So you get your money tomorrow. Your covered period, your 8 weeks, starts tomorrow. And you are only limited to one loan. So you get one shot. And then once the money is received, you can begin spending it on whatever permitted expenditures. That would be those payroll, rent, mortgage, utilities. And you want to really make sure that you're keeping track of your expenditures. So you want to put this money when you get it in a separate account, and you want to make sure that you're recording how much is spent and exactly what it's spent on, particularly because the forgiveness element, we know something about it now, but as we've seen, things are liable to change. And currently there's litigation out right now for the way that independent contractors and self-employed people, their forgiveness is being calculated, because it's not really fair. It kind of cuts you off, and we're gonna talk about that in a second. So it's important that you keep track of your expenditures, because you want to make sure that if something changes and you're eligible for more forgiveness on the loan, then you're able to get that. So for forgiveness, once you spent your loan and it's now end of June, you're going to be talking about forgiveness. So the first step that you want to do is you're going to check your tax treatment. So do you have a 1040 Schedule C, independent contractor, or do you have an 1120 for your corporation? So you're going to choose your forgiveness formula. Now, if you're a Schedule C, you go with the first formula. And that's if you're a 1120 or even 941, go with the second forgiveness method. So the first method is just your line 31 income. Again, you subtract the EIDL grant, which we're going to talk about shortly. If you have one, then you multiply by 8, divide by 52 for 8 out of 52 weeks. So then if you are so for example, I think it's helpful to do examples. So if you have $90,000 a year, then your loan amount, as we would have calculated from the last page, is $18,750. Your forgiven amount is going to be $13,846. So that additional $4,000 or so is going to become a loan that's subject to those terms of the PPP that we discussed 2 slides ago. So that's that 1% interest for the 2 years, 6-month deferment. Okay. Now, if you are a corporation, your forgiveness amount, well, your amount's calculated differently, and then your forgiveness amount is also calculated in a much more confusing way. So we're going to kind of run through this because it's a lot. And if anyone has questions on it at the end, please let me know. But your forgiveness amount is your loan amount. Then you subtract out from that any EIDL grant that you have or any funds that you did not use. And then you're going to multiply by what's called an FTE deduction percentage, and then reduce again by a salary deduction. So the FTE deduction is your full-time employees. So you take your number of full-time employees that you had during the covered period, which, like we said, is from the origination of the loan, and then you divide that by the number of employees that you had during either of these test periods. And I've written them out. They're that February 15th to June 30th, so that's last year, or January 1st to February 1st. So this is what happens for people that had to lay someone off because of the disaster. And the goal is to keep those numbers the same so that you get a ratio of 1, which would be 100% retention. If you had 5 employees and now you're down to 4, you now have 80% retention. So you would multiply that loan amount minus the grant and the unused funds by 0.80, and that would give you your new loan amount. If you had a salary deduction, you're going to deduct again. So the salary deduction is the amount by which a full-time employee's wages were reduced by more than 25%, because you're allowed to deduct up to 25% with everything going on. But if you get over that, they're not so happy about that. So if you made $90,000 and you now make $65,000, that 25% is $22,500. So your maximum reduction should have been $67,500. And so if you go below that to like $65,000, then that $2,500, that's an additional deduction off of your loan amount. So you're going to take that number after you've just multiplied it by the 0.80 from our last example, and you deduct again another $2,500. So then we're going to go to the next slide. Maybe we'll go to the next slide. Aha. So then there's this 75% rule. So this was originally not in the CARES Act. This is something that the SBA decided to implement on their own, and this is part of what's being litigated right now. So it's going to be subject to change. Something to just be aware of as you're moving forward. So at least 75% of your loan must be used for payroll. The other 25% may be used for other eligible expenses. So what that means is if you've expended 75% of your loan for payroll purposes, then you're fine. You've reached your maximum forgiveness. If you expend less, you are leaving money on the table. So if you have a loan amount of $18,750 and you use $12,000 of it for payroll, you've now left $2,000 on the table. That will not be forgiven. And this is because that's less than that 75%. So you've unintentionally capped yourself basically on how much you're eligible to have forgiven, and now you're going to have to repay it back per the terms of the loan. So it is currently unclear whether additional expenses are going to be included for independent contractors and sole proprietorships. We're waiting on further guidance for that. And all expenses are going to be based off your 2019. So as we said, it's based off your 2019 Schedule C. So then your expenses are also going to be based off your 2019 Schedule C. So you must have been able to claim a deduction for a mortgage interest, rent, or utilities in 2019 to be able to claim them for the PPP. And for tax implications, I get a lot of questions on this your loan is not income, so it's not going to be taxed, and also you're not going to be taxed on the forgiveness. So to kind of put that, I guess, in more real estate terms, if you have a short sale and the bank forgives $20,000, the government would usually tax that. In this case, they have decided not to tax that. So what that means is that usually you'll be unable to deduct expenses where you have a forgivable loan amount. So we're going to wait and see because they haven't actually come out yet and said that. So in the spirit of keeping things positive, I would keep your documents anyway. That way, if they do decide to allow you to potentially deduct expenses because they're trying to give a lot of businesses and people these breaks, so it's possible that way you're able to take advantage of it. Right. Let's see. Now we're going to go to the EIDL, which is that other loan that people, I would assume, have heard of. Okay. So this loan is different from the PPP in that it's meant to cover a larger period of time. So the PPP is meant to cover 8 weeks, and this loan is meant to cover 6 months. It's also more flexible than the PPP. It allows you to pay longstanding debt in addition to payroll, mortgage, rent, and utilities. However, there is no forgiveness with this one. So to apply for this, you're going to apply through the SBA. You're going to need the Form 5C, which is the application, credit score, IRS 4506T. You'll need your income tax returns, your SBA Form 1143, schedule of liabilities listing all debts. However, if you're an independent contractor, you get to use their streamlined application, which is significantly shorter and easier to use than the other one. So that's nice of them. And then for this, the loan max is going to be $2 million, with an interest rate of 3.75 and a maximum term of 30 years with an automatic 1-year deferment. So these terms, unlike the PPP, are not as set in stone. That's usually what we're looking at. That's what most people get, but they are subject to change depending on the borrower. So to receive this loan, to be eligible, you have to have been in business for 1 year prior to the disaster, and you need to show the business has decreased due to the disaster. Like we've said, you're going to meet that. Real estate's down 50%, so that second part's not an issue. If you have not been in business for 1 year prior, unfortunately, you're not eligible for this loan. Okay, so this is an interesting feature of the EIDL and the PPP. So if you have both an EIDL and a PPP, you can get both, but you cannot use the funds from both for the same expense. And that's kind of complicated because it's not just like, oh, you're limited, one's payroll, one's rent, or something like that. It's more like you can't use them specifically for the same payment. So you could use the EIDL for rent, PPP for payroll, and that's fine, and just use it that way. You could use the EIDL for a first payroll payment and the PPP for a second payroll payment. You just cannot use both the EIDL and the PPP for the same payroll period, or for example, like the same month's rent. Let's go to the next bubble, potentially. Or not, or we're stuck. Okay, so this next thing I want to talk about is the grant. So I feel like a lot of people heard about this. Everyone was, I feel like, originally told, yeah, you're going to get $10,000. And then that didn't happen. And people were like, what? Okay, you are not going to get $10,000. The maximum is $10,000, but it really is $1,000 per employee. So if you're a sole proprietor, independent contractor, you get $1,000. Now, the grant is more limited in what you can use it for. So you must use the grant for paying sick leave, mortgage and rent payments, payroll, increased cost to obtain materials, and repayment of longstanding debt obligations. So you can get the grant and use it for this. This is more so to get forgiven. I mean, technically you could use it for something else, but it wouldn't be a grant then. So use it for these things. And then, I don't know if I have another. Okay, yes. So if you get the grant, this is deducted from the PPP. So that's like what we saw on that second to last page when we were talking about forgiveness, that I had minus the EIDL grant. If you get the grant, that amount is deducted. So if you had our usual example, $18,750, you are now down to $17,750. It's a quick subtraction. So you can get both. It's just a matter of subtracting that. And then also, if you have both the EIDL and the PPP, you can refinance your EIDL into your PPP. That gives you better loan terms in the sense of interest. You would be down to 1% interest, but you would then be subject to the 2-year repayment versus that 30 years. So this is going to be, how much money did I get? Does it make sense for me to do that kind of question? Just something to be aware of. Let's go to the next blurb, potentially. Okay, well, while that figures itself out, the next thing we're going to talk about is the stimulus check, which there it is. So the stimulus check, what this was everyone gets a check if you fit into their qualifying adult language. So the check is for $1,200 if you get the full amount, with an additional $500 per child that's 16 or under. So what this means is that what there was basically was a phase out period. So if your income is greater than $99,000 for a single filer or $198,000 for a joint filer, you're out. You do not get a stimulus check. You're beyond the range. If you have an income of $75,000 or less, or a joint income of $150,000 or less, or that head of household income of $112,500 or less, you're going to receive the full stimulus amount. So you'll get that full $1,200 with the $500 per dependent. If you are between those amounts, your stimulus check is phased out by $500 for every $100 above the qualifying amount. So that's above $75,000 until you hit the $99,000. So for example, if I had $80,000 in 2019 as my income, then my stimulus check would be reduced by $250 for a total amount of $950. So, and this is all determined by your 2019 tax return. If you don't have a 2019, they look to your 2018 tax return. So then the next thing would be how you're going to receive your check. So you should receive this by direct deposit if you got direct deposit on your tax return. If you did mail to receive your last tax return, you would receive it by mail. If you are currently set to receive it by mail, if that's how you received your last tax refund, and you would like to receive it by direct deposit, you're going to input your direct deposit information into the IRS's Get My Payment tool, which if you plug that into Google, comes right up. If you were not required to file taxes for any reason, and you do not receive Social Security benefits, you have to file a separate application for the stimulus check. And you do that by going to the Intuit has a really good program for it. So if you type in Intuit and then stimulus registration, that's a way to make sure that you get that. Let's see, I'm gonna talk about the tax effects next. So you do not have to pay income on your stimulus check. So, because it's not income, it's going to be considered relief. So if your income in 2020 is greater than 2019, you will not have to pay back the stimulus amount. If you are underpaid based on your 2020 income, you will receive more credit come next tax season. And this is entirely automatic. It's not something you have to do or put in. It's just something that I wanted to make sure everyone was aware of. Also, there is talk of a second stimulus check. So we're waiting to see if that's going to pan out. All right, now we're going to talk about unemployment benefits. So as of April 24th, self-employed independent contractors and gig workers are all eligible for unemployment benefits. And this is in both Maryland and Delaware. And that will last until December 31st of 2020, unless for any reason it is extended, which we will have to wait and see. Now, the benefits have been extended to cover 39 weeks, both states. And the amount is calculated based upon your income for the last 18 months, roughly, with an additional $600 per week until the end of July. So it's rough. I think Delaware is technically based off of 15 months, and then Maryland is based off of 18 months, but that's generally what it comes out to. And then you're going to need to apply. You'll need your personal information. That's your name, your social security number, the personal information of any dependents that you are claiming as well. And then you'll need your name, payroll, telephone number, reason for separation from your employer, if you had one. Delaware is also requiring some additional information. They'll need driver's licenses, last year's income tax statement, business license number, and current bank account and routing numbers. This is just the Maryland site. I could not find the Delaware one. So this is income. So you do pay income taxes on unemployment. And then that's pretty straightforward. I like that it's actually working now. All right, so then we're going to talk a little bit about some tax benefits and exceptions, because a lot of the tax deadlines were moved around with everything that was happening. So most of them have been delayed until July 15th of 2020. That's going to be your personal and business income taxes, your 2019 gift and GSTT tax, federal income tax for trusts and estates, and IRA and HSA contributions. So these are all federal, so they're going to all be the same for both states. Both Maryland and Delaware have also opted to extend that to your state filings, so counts for both. The extension for personal and business income taxes, that's also going to apply to the first and second quarter 2020 estimated income tax payment deadlines. So you'll want to be aware of that if that counts for you. And then the IRA and HSA contributions, this means that you can continue to contribute to an IRA or an HSA through the delayed filing date. So if you don't have a reason to wait on filing and you need the tax return money, then I would go ahead and file. There's no real reason to wait for, I think, probably most people. If you are planning to apply for the PPP, you do need at least a prepared 2019 Schedule C. So you don't necessarily have to file to do that, but you do need it prepared. If you are self-employed, you can defer half of your liability for the 12.4% Social Security tax component of the self-employment tax. And that's beginning March 27th until the end of this year. So you just don't pay the tax, you just keep your half. And these amounts are going to be repaid in 2021 and the end of 2022. If you get the PPP loan, you cannot use this. It's basically considered double dipping. So something also to be aware of. However, if for any reason you can't apply for the PPP and the EIDL, this is a way to save money on any business that you still are working on. And then I'm going to talk a little bit about some retirement account changes. Goodness. So required minimum distributions. There are none for 2020. So that's actually great. And then you can take some early distributions even if you are less than 59 and a half years old, so long as you say that you have suffered financial harm due to COVID-19 and only up to $100,000. So that's no 10% early withdrawal penalty. Tax on the withdrawal can be repaid either entirely in 2020 or it can be spread for the next 3 years. If you repay the money you withdrew within 3 years, then the withdrawal is deemed a rollover distribution, so you get the money back. We don't actually have a form for this yet, but this is how they said they're going to do it, so we can expect one. The repayment does not count toward your annual contribution limit, so you're not capped by that at all. And yeah, it looks like you're just going to have to file amended returns for the reimbursement of the taxes now. This is a kind of a planning opportunity. So if you get that tax deferral and then you can just pull it out whenever you want, if you're still able to contribute to your IRA and HSA and all of those, then I would go ahead and do it. 401ks, IRAs, just put the money in, get the tax deferral. There's now no reason why you can't pull it out because there's no penalty on it. So if you're still able to do it, I recommend doing that. Or it's an opportunity if you want to move money from an old 401k to a new one, you can go ahead and do that, and then you get the taxes repaid. So it's something you could take advantage of. And then you have, potentially, if it will show up, 401k loans. So these are going to be very specific to whatever your 401k plan is, so you'll need to talk to your plan administrator. If your plan allows and you self-certify that you have suffered financial harm due to COVID-19, you can take a loan that is subject to some changed terms. So if you have a loan from your 401k that is made prior to March 27th, you can defer your 2020 payments. For loans that are made between March 27th and September 23rd, you can borrow the lesser of $100,000 or your vested account balance and defer 2020 payments. Even though the payments are deferred, the interest does still accrue, so be aware of that. And you will need to repay within 5 years. If you don't, then the loan's considered terminated and it becomes distribution. You have to pay tax. So let's see if it's frozen or not. So all of this is in flux. As I've said repeatedly at this point, it changes every time I turn around. I can't tell you how many times I've had to change this PowerPoint just while I was preparing for this. So for up-to-date information, you're welcome to visit my firm's website. We post frequently with updates on the situation and changes in the law, things you could also take advantage of. So you can go ahead and start questions. Happy to answer what I can. Hopefully nothing has changed in the last 30 minutes. All right.
Halle, I don't know if you can see the chat box, but I'll try to read them out for you if that's easier. So first question is, how does the bank statement show self-employed?
The bank statement? Oh, you just need something, whatever that would be, that shows that you are self-employed. It works for some people. It's just really anything that you have. They're just wanting to check to make sure that you are indeed self-employed. If that means you can write a check to yourself, just pay something, as long as it has the name of your company and they can match that.
Next question is, when do you have to start repaying the PPP if part of it is determined to be a loan? And can you use all of the PPP for salary?
So this is going to depend a little bit on that last point, but for the first part, you start repaying the PPP, you wait until that forgiveness period hits. So that's, I believe they're saying the end of June, obviously a little TBD there, but once you get how much of your loan is forgiven, then they turn the remainder of it into a loan. So you won't even know until then. And then from then you have 6 months to defer. So you don't have to pay until 6 months from when you hear about how much is forgiven. Can you use all the PPP for salary? So if you are an independent contractor, well, really if you were anyone, yes, but it's more of a practical question. But for the independent contractor, yes, you would take everything they're counting as, they call it something interesting. They call it like employer compensation, like fund. It's basically what it means is you're just repaying your entire salary if you're an independent contractor. That's that 8 out of the 52 weeks. They're not giving you an option really to take forgiveness for any rent or utilities that you have, which is part of why this is being litigated, because it's not really fair, because if you're a corporation, you can do that and increase your forgiveness amount, versus independent contractors, sole proprietors, single member LLCs are all capped with that amount times the 852.
Okay, so thank you. And, oh, wait a minute, Steve, I'm not understanding your question. If I have.
Oh, am I on mute? Can you hear me?
Now we can.
Hear you?
Okay, let me just stop writing this. So if we receive the, well, is it $1,200 a person, or checks from the IRS, and it was already deposited to an account, and the 2019 taxes had not been completed yet, so the amount of the refund was based on 2018, right? And
Right.
now let's say we complete the 2019 taxes, and it makes us eligible for less, than 2018. Will we have to give some of that money back based on the actual 2019?
No.
Oh, awesome. Okay, so there's one strategy for not filling out your 2019 taxes
Right, there is indeed
right
one.
away, right? But in order to get the PPP loan, you do have to fill out the 2019 tax. You have to have that done now, or at least the Schedule C.
Right, you need it at least prepared. You don't actually have to file it yet, just something that's completed. So you talk to your accountant about that one. Yeah, it's considered relief. They're gonna probably credit it out at the end of 2020. They'll be like, oh, you got more than you should have. And then they'll do their math, but you're fine. You don't have to repay it.
So the next question, and I think that this one has probably been on, for some people, this is probably similar. And that is, what defines severely impacted? Meaning if I'm actually still able to do some business, because in Maryland and Delaware, we are able to still do some business. However, a lot of our business comes from out of state folks who are banned from coming here. So business is down, yet so therefore maybe I am still receiving some income, but maybe I'm not receiving as much as I normally would if the market was open.
Right. So, sorry, I needed some water. Okay. So severely impacted is partly based off of your income and then partly based off of what's going on around you. You should be severely impacted. If you're not making as much as you were and it's cut by, there's actually a percentage for it, and I had it written down because I can never actually remember it, weirdly enough. But that's not helpful.
Meaning if your business is down by a particular percentage, then
Right.
that would be a qualifier.
Then you're considered, but it's not a large percentage. I want to say it's like 25%. Like it's not like you have to be 75% like out of business or something, or your doors don't have to be closed. So yeah, you should all be meeting that, especially if most of your business is coming from out of state.
Okay.
What was the second part of that question?
Sales resumed.
Does
It
it
doesn't
matter
matter if we still have financial resources. Yeah.
No, for applying for the PPP and the EIDL, you do not have to prove that you could get the money from somewhere else, unless you're a very large business. No income right now.
Oh, can you see that as well?
I can.
Okay.
For everyone everyone can see it. Great. So if we get approved for unemployment, but then we have a closing that gets us $6,000, you just exclude that 1 week that you got paid and then start collecting unemployment again. So this is actually something I'm not entirely sure yet because we haven't gotten a ton of guidance on it. So my understanding for right now, which is as always subject to change, then no, you would just take the money in and don't exclude that 1 week. Just keep collecting unemployment. They assume, particularly if you're self-employed or an independent contractor, that you are still able to maybe work some, so you're going to get some income, but they're not going to go after you for the $6,000.
Okay. Anyone else have any other questions for Halle?
Bridget, I have a question.
Okay.
Sorry, it's Megan. I guess I don't even have my video on. Sorry. So quick question. So for the PPP, knowing that we have earned some closings from prior to the shutdown, obviously we do have some income coming in from those previous months. Now, given that, like, let's say the period starts May 1st and you said you can use the PPP loan through the end of June, technically we're not really going to feel the effects of our income until probably July. So how do we go about dispersing those PPP funds towards payroll if it's not going to really hit us until July?
Unfortunately, you have to use the PPP within that 8-week covered period. So you don't have much of a choice. My advice is if you can, I'd squeeze an additional payroll period in to that 8 weeks. If you can finagle your payroll in that way, just to get as much as you can out of it. Otherwise, it's unfortunate that you're kind of stuck that way because they've just said, here's your loan, you have 8 weeks to use it. Like, end game kind of.
Does it make sense if we were to take like the income from the closings and just put that into the team account and use the money from the PPP to pay the employees? And then that way we have the income in the account for the following months. Is that like a legal thing to do?
Yes, you can do that.
Okay. All right, that makes sense. Thank you.
No problem. Anyone else?
Yeah, I feel like somebody else had a question. They were right, maybe at the same time that Megan did.
Mm-hmm.
Anyone else?
Is it Steve?
I've got a question. So we have an LLC. We don't have any W-2 employees. We have independent contractors. It's a vacation rental business. But my wife and I are part of the LLC. We did not issue ourselves regular employee checks. We just took, commissions and deposited them. How would something like that work with the PPP program?
All right, so this is where it gets kind of like weird.
Yeah, I don't want to take
So-
up anyone else's time too. If I don't know if you're available to talk offline.
Yeah, why don't you shoot me an email and let's talk offline.
Sounds great.
Yeah.
Thank you.
No problem.
All right.
All
Anyone
right.
else? No one else? Going once? Going twice? All right. Well, Halle, thank you so much for your time, and gosh, you've obviously put a lot of work and homework into that presentation, and I do have that presentation. Halle did share that with us, so I will certainly put that out there so you all can use that as a reference and resource, because there were certainly some links in there and just your examples. I don't know if anyone was like taking notes, but it was a lot, right? It's a lot to know and digest and understand how to do the calculations and so forth. So we'll share that presentation out, and thank you again. Really appreciate your help there. That was much appreciated. Thank you.
Great. No problem. All right. Have a good day, everyone.
Awesome. Thank you.
Thank you very much.
Thank
Bye.
you.